I was living in a property that wasn't quite right for me and my family long term. And I was getting more and more interested in Bitcoin, particularly as a store of value. And so we decided to sell some real estate to help accumulate some more Bitcoin. I did that with a couple of different things. Now, what I've come to learn about real estate is I struggle to see value in it. And when I say like the matching of the price and the value of course is like you cannot live in a Bitcoin, full stop. So where are you going to live? You need shelter. And depending on what your tastes and preferences are, you've got a certain type of shelter you're looking for, be that location, be that size, be that price, whatever the case might be. But on Monday, I went to view a property that I was really excited about seeing because I thought, you know what, maybe I'll sell down some Bitcoin, pay the deposit, take on some debt, and boom, we're going to have a family home in a place that I really like and of a quality that's what I'm after. And the truth is, I was driving all the way there, and it's a little bit out of the town I want to live in, and suddenly like that's a compromise. And then when you get there, it's like it's what I would describe as like very fiat, which you have to be pretty far down the Bitcoin rabbit hole to kind of comprehend. But it looks nice. It looked really nice. You're like beautiful view with like a pool and some grassy area nearby that you can see your kids running around and having a great time. But then you're like, what's the price? And the price was like big. I was like, whoa. And then it turned out that they paid an even higher price 2 years ago, and that they'd what I would call fixed veiled my time as a shipbroker, is they'd agreed a price. The owner had agreed it subject to the buyer selling their current house. The current house hadn't been sold, so the sale fell through. And that new price that they already agreed was 20%, 15% lower than their purchase price. So they'd owned the property for 2 years. They were already willing to take a 20% discount. We walked around. We're not surveyors, but we saw straight away like rusty parts of the property. I mean, this has only been built in 2020, 5 years ago. Clear water damage, moisture coming through. What we've learned about where we're currently living is like mold is really, really bad for you. Consistent mold exposure, headaches, skin problems, bad sleep, terrible mood, and like 100% you do not want to be living in a moldy house. What I need is a healthy home, somewhere that you're not getting exposed to EMFs. You don't have toxic chemicals painted all over the walls. You don't have molds in your bedroom when you're sleeping at night. Lots of sunshine, a bit closer to nature than what I might have had before. And suddenly you're like, why would someone pay that money for this house when it's not those things? So I'm obviously not the right buyer. And it comes back to that concept of like value is subjective. A bottle of water costs you 50p in the local pub. If you're in the middle of the Sahara, you pay $500 for it. That's just a simple example as to how people look at things and get different value from them, and they pay based on their individual value. And that's where the Austrian School of Economics is such a powerful thing to research, because it helps you understand the world around you in a way that just isn't possible before. Anyway, where am I going with this? It's like, okay, so I'll give you some like rough numbers, not specific to this property, but just for sake of argument. If someone pays 1 million Australian dollars for a property, and 2 years later the markets come off and they're willing to accept 800 grand, has the value proposition of that property changed, or is there some dynamic going on that the price has been affected by in the wider markets? Good question, right? And then to flip that round, it's like, okay, someone pays $1 million for a property. 2 years later, they're asking 1.2 million for it. Now, they spend 2 years living in that house, so there's more scuff marks, there's more breakage to it, there's usage, maybe there's a bit of water damage, maybe the toilet doesn't work properly, maybe there's now a building site next door, like who knows, right? But the property has been used. So why has the price gone up? And what I find with real estate that drives me mad is that most people operating that market have absolutely no idea about the question, what is money? Like none at all. So you say to them, why has the price gone up to 1.2 million over the last couple of years? Oh, the market's really strong. Like here in Australia has a large amount of immigration, for example, that tends to be pointed to as something that props the market up. But no one ever looks at like, okay, well, how much money's been printed? Could it be the case that there are 20% more dollars in circulation than there were 2 years ago? And then it's like, okay, let's factor in, I'll give you kind of slightly elongated example. All right, someone pays $1 million for a property. 5 years later, they sell it for $2 million. Woohoo! I made $1 million. I'm a real estate investor. Well, did you actually make $1 million? First of all, over those 5 years, if they lived in it themselves, they didn't create any revenue on the property. They had just expenses. So you've got property taxes, you've got maintenance, upkeep, all the different fees, with living in a house. Maybe they did rent it out, but then they would have had to pay for agents to manage it. And maybe they had fallow periods where they were making no income, and actually the occupancy was as low as 60% one year. And it's like, okay, well, how much revenue did you make in that 5 year period? What were the costs of that 5 year period? Okay, so now actually it didn't make $1 million. It's cost you money to get to that point. So it's cost you money to hold it over those 5 years. And then, oh, look, the government's actually printed 40% more dollars. So in my view, the real estate investors out there, they're not increasing purchasing power. And you can go and read books like what's it called? There's a book about the Weimar Republic, 1920s hyperinflation. Damn it. I forget. I have to look it up. It'll be on my reading list somewhere. If anyone wants to know, then message me. I've completely forgotten. Oh, When Money Dies. That's what it's called. And basically, the market participants value things in a metric that they haven't understood. In that, okay, I got more dollars today. Woohoo, I'm rich. They literally think they're getting rich. But actually what's happening is the denominator, i.e. the metric that they're measuring in, is disintegrating in value. And so when you go and map, the average real estate price of a local neighborhood in gold, or you look at a stock market over the last 10 years in gold, you suddenly start to see there's very little change. Or you start to map the government's base money supply shifts against the growth of the stock market or against the real estate market, and you see they're almost completely the same. And this is wild. If you haven't stopped and asked yourself, is the value of the money I'm pricing assets in changing, then obviously you don't realize. And so when I get like these real estate deals, they come across my desk and I'm like, oh, I get kind of emotional about it. I imagine living in the place. But then when I physically go there, the price that's being asked versus the value that's delivered is just a monster gap. And I personally, I just cannot get there. I'm not buying someone else's house that is essentially, you're inheriting all their problems, like all the shortcuts that were taken during the design process, all the shortcuts that were taken during the build process, all the money that wasn't spent since someone's owned it in order to like try and capture a bit of yield become your problem. And I think the conclusion we're coming to is like what we actually want to do, buy a piece of land and build from scratch. And there's an architect we've come across that we really like, because the aim for us is to build a healthy home, right? Low tox, low EMF, no mold, nice and warm, lots of sunshine, plenty of grass. And it's not that I'm necessarily driven by the idea of like, oh, I want to like have a sustainable house, i.e. Paris Agreement 2050 must save the world, Greta, at all. But more like we want to have a very safe and healthy place for us to raise a family in. And some of the modern building techniques just don't supply that. And actually this architect, again, if anyone's interested, reach out to me. Really sad story. His father-in-law died from chemical exposure as a builder. And as an architect, that's like what basically has formed his life's work. And he uses something called hempcrete to create walls. And it sounds awesome, and I'm going to learn a whole load more about it. But as an investor, I'm suddenly starting to see a better picture where it's like, I refuse to get involved in the game where buying the title of a property that you didn't build yourself, you're basically inheriting someone else's problem. And the only reason the price is shifting, well, not the only reason, because immigration definitely counts and taste is part of it. There's actually just so many different factors that go into valuing a piece of real estate. But my strong feeling is that like 75, 80% of the price appreciation is happening because of the inflationary monetary supply. And people just aren't realizing that. So one way to create value is obviously take a piece of grass and build shelter. And that's what we're going to hopefully do. And we're going to try and build a family home. But it just, the real estate market has been winding me up recently because, the boom period of 2020 to 2022. And where I am was basically a bit of a haven from all of the crazy lockdown rules that happened in Australian cities at the time. So people rushed to come up here and spend their money. And equally, the Royal Bank of Australia printed a ton of dollars. So again, people think they're getting rich, but actually, what if it's the denominator falling in value? Anyway, I think that's a story I can repeat a million times and still people aren't paying attention. But I'm sitting in a great position where it's like, okay, I was able to reallocate into Bitcoin in a not even 5-year period. I feel like, I control my own time. My balance sheet is healthier and my relationships around me are healthier with my wife and my kids. And that is unbelievably exciting position to be in. But then it's like, what's next? And then use this capital to deploy it in an effective way to help us for the future. And of course, somewhere to actually live, to have shelter is an important part of that. And it's something I'm really just figuring out.